Do you guys want to know how to grow your retirement portfolio tax-free by investing in real estate? Coming up. I'm here with Kelsey with Midland IRA. We're going to talk details on how to grow your retirement portfolio with real estate, buying real estate. Really appreciate you joining with us today.
Thanks for having me.
Yeah, thank you. So we're going to dive into some common questions that you might have, but yes, you can buy real estate with your retirement account. So before we even jump into this, why don't we talk about how many people actually do this?
Yeah, so there's trillions of dollars, I mean trillions with a T, dollars out there in retirement accounts, but really only 2 to 3% of people actually use their retirement money to buy real estate. And it's allowed across the board. It just depends on where your money's held and if the people who hold your money allow real estate as an investment option. So a lot of people now that they're discovering through their own education or online searches that they can do this, that number is definitely increasing, but as of right now, it's still a huge untapped, source of funds for a lot of real estate investors.
2 to 3%.
2 to 3% out of trillions of dollars.
That's crazy. So you have 97, 98% of people going the traditional way. So what's the traditional?
Yeah. So traditional things would just be the regular stocks, bonds, mutual funds, things that people, when they think retirement money or 401ks or IRAs, that's what they default to. And a lot of times they default to those because they don't think you can do anything beyond stocks or bonds. And quite honestly, most brokerage firms out there, they're not really interested in educating you that there are other options. So your stockbroker is going to sell you stocks. That's his or her job. That's what they do. That's what they're knowledgeable about. But in reality, if you do a little education yourself, you'll be able to find out that you could buy investment real estate just as easily as a stock or a bond. And they're both considered assets within your retirement account.
Yeah, that's awesome. And I personally love it because I like tangible investments. I like to be able to go up and touch a duplex or whatever the case is. So what if somebody has a retirement account in their current job or whatever the case is, what retirement accounts could be brought over into a self-directed IRA?
Sure. So self-directed IRAs, it's not a specific type of IRA. So self-directed means you get to choose the investments and that you have the freedom to put the money in things like real estate. A self-directed IRA could be a traditional IRA, a Roth IRA, a SEP, a simple, all the different types of IRAs are out there. Self-directed just means that I'm allowed to put my retirement money into something like real estate and I get to make my own investment decisions. The types of funds that can be brought over would be something like a 401k. That's probably the most popular.
Right.
You used to work for somebody,
right.
You have a 401k from years and years of working a 9 to 5, and then once you leave the job or you retire or whatever it is, that money you can now roll over to an IRA. So we see a lot of 401k rollovers. We also see people who have pensions or maybe a 403b. For some of the military people out there, maybe a thrift savings plan, a TSP. So there's all sorts of retirement accounts floating around out there. And really, as soon as they're mobile and you can roll them to an IRA, you could roll it to an IRA that allows real estate.
Got it. Very cool. All right, so let's say I have 100 grand in an IRA. What's the process for that?
Yeah, well the first thing
in a 401k.
Doesn't matter. It could be an IRA, it could be a 401k, pension, any type of retirement account will work. So my first question to you would be, okay, you have 100 grand sitting in some sort of retirement account.
Yep.
The first thing is you have to open up an IRA that allows real estate as an investment option. That's the biggest thing that people have problems with. They have to find an IRA company that allows real estate as an investment. And that's more of a niche firm that doesn't sell you, a product like a stock or a bond, and that's what my firm does, which is why we're talking about it today. So you find an IRA that allows real estate, you set up an IRA account with them, and then the second part is wherever your $100,000 is now, you've got to get that money over to the IRA that allows real estate. So if it's coming from an existing IRA, that's really easy. We call it an IRA to IRA transfer. The current custodian, meaning the company that's pulling it over that will have the funds, we can actually pull it for you. So you can authorize us to pull it. If it's coming from something that's not an IRA, like a pension, a 401k, whatever it might be, you have to initiate it. So you have to push it to us. So IRA to IRA, we can pull it. Non-IRA, you have to push it. And usually with a rollover, that's what it's called, you're rolling over a 401k, they'll give you forms. So you'll just call your 401k plan. They'll say, hey Steve, fill out this form and tell us where you want us to push it to. And you'll actually push it to your IRA at Midland.
Is it I think a lot of people have this misconception, like, is it difficult to do that?
No, not at all. It's just paperwork. I mean, paperwork sucks, but if it's a matter of getting the money to an IRA where you can do something you want to do, like real estate, we're talking a couple weeks. I mean, maybe with a big government plan, like a TSP usually might take 3 to 4 weeks, just depending on how backed up, you know, the government administrative services, but it's pretty easy. It's just paperwork, and you allow it to be moved to an IRA with us. I will give a shout out to people like Charles Schwab. If you're moving money from an IRA at Charles Schwab, they're super easy to work with. It's literally a couple business days and they wire it straight to us.
Wow.
So those guys are great to work with. Other guys, you know, if they're a big government agency, it's going to take a little bit longer.
Gotcha.
So rule of thumb is give yourself about 2 weeks.
That's pretty awesome though, considering if, you know, I got my eye on a specific property, I could facilitate this pretty quickly.
Super easy. I mean, it's basically your proof of funds. So you find yourself a property that you want to buy as an investment, you submit your retirement account statement as proof of funds, and then we basically just take care of pulling the money over for you. And once it's in an IRA at a firm that allows it, you could use it to buy real estate.
Gotcha. Very cool. All right, so let me ask you, I have $100 grand that I want to bring over and set this up, but the property I'm looking at is 200 grand. What, like, can I get financing or like, can I partner with somebody?
What are your options?
Yeah, what are all the options?
Yeah, well, if you can't do a cash purchase, so you got 100, you want to buy something that's worth 200, you're looking at either financing, so you can finance in an IRA. The government basically forces you to do what's called a non-recourse loan. And non-recourse means the bank or whoever's lending you the money, your IRA is the borrower, and the IRA is not a person. It doesn't have a 9-to-5 job it's working, right? So you personally, you know, Kelsey Dineen at Midland, can't guarantee the loan. I basically have to say my IRA is buying the property, my IRA is putting down this money, the loan to my IRA is non-recourse. So if something goes bad, the lender can't go after me personally, it's only the property in my IRA. So that's what non-recourse means.
Right.
So because I'm not personally guaranteeing it, basically the bank or the lender has less collateral to go after, so they require that you put down a larger deposit, and usually the interest rates are a little bit higher. On average, I usually see they usually require 30 to 50% down, just depending on who the lender is.
Right.
And the interest rates aren't like super high. We're not talking hard money rates here. We're talking maybe a couple, you know, 2 to 3 percentage points, you know, up above what an average prime rate would be or something like that.
Got it. And then what if I knew somebody else that wanted to cough up the other 100 grand? Could my IRA partner with an individual or an LLC?
Sure. So your IRA can partner with anyone, and that's something we see a lot, especially between like husband and wife. The husband has maybe 100 in his retirement account, the wife has 100 in hers. So independently, they don't have enough money to buy a $200,000 property, but they can partner that money together. So on the deed, it would actually say his IRA owns 50%, her IRA owns 50%. And it's like a partnership, a tenancy in common. So what that means is if it's 50-50, then each IRA owns half the property, each IRA pays half the bills, each IRA collects half the income. So everything is split according to those percentages.
Got it.
And it doesn't have to be a spouse. It could be literally anyone. So Steve, if you had money in your 401k and I had money in my retirement account, we could partner together to buy a property.
Got it. Okay.
So partnering, financing, there's a lot of different options out there.
Okay. All right, so let's say my IRA, let's say the 100 grand, I buy just one single family house myself in my IRA. Who handles collecting the rents and because I know there's got to be a kind of a middleman in that. Who handles paying all the bills and that kind of stuff? Great
question. So if your IRA owns the property, the IRA is on the deed as the owner. The IRA has to pay the bills, so it could be property taxes, any sort of renovations, insurance, whatever you need to pay to maintain that property. If the IRA owns the property, the IRA by law has to pay all those bills.
Okay.
So when you buy a property, you got to make sure you have a little bit of a cash buffer left over in your retirement account, because you got to use that cash to pay the bills. Once you're renting the property and it's cash flowing, that rental income is going to go right back to your IRA. So you're going to have the cash basically being replenished to keep on paying those bills. And then the great thing is, you know, the IRA owns the property. It gets to collect all of that rental income. And unlike if you or I did it using our personal savings, we'd have to pay, income taxes on any of the, income we produced. If the property appreciated in value and we sold it, we'd have to pay things like capital gains taxes.
Right.
None of that applies in an IRA. An IRA is a tax shelter. So I kind of compare it to, you buy a rental property. The rental property is generating, cash flow. That cash flow returns to your IRA. It's kind of like when you buy a stock or a bond in your retirement account and it has dividends or some sort of income. It's the exact same idea, but all you're doing is you're buying real estate, and the real estate's generating income that goes back to your retirement account tax sheltered.
And I mean, personally, I think it's predictable. I mean, right?
It's brick and mortar, right?
Yeah.
It's not going anywhere.
I mean, if you know roughly you're going to net $1,000 a month on a property, you kind of know that you're going to have $12,000 every year tax-free at the end of the day.
Yeah, well, people really like that because what I hear the number one complaint is, I've got a lot of money sitting in the stock market, and the stock market's been good to me lately, but I worry because it's a bit of a roller coaster.
Yeah.
There's a lot of volatility there. It goes up, it goes down. I just want to basically take some of that money and put it into something that's boring. I like boring. I want normal returns that I can expect on a monthly basis. So when people come to me and they say, I found a really great investment property that I think would be a good fit for my retirement portfolio, we're really just helping them do that so they can kind of take some of that money out of stocks or bonds or whatever they're looking to diversify out of and put it into real estate. And the beauty of it for me is, you guys are finding those investments. You're telling me what you want to invest in. We don't give any investment advice.
Right.
So it gives you guys a lot of flexibility. You can go out there and you can invest in whatever you want. The only two things by law you cannot do are life insurance or collectibles, and that's it.
So pretty much any real estate asset out there you can invest in.
Any type of property.
Yeah.
It could be vacant land, it could be condos, it could be multifamily, it could be single family. I mean, whatever you find that has a good rate of return and you think would be a great investment, you can put it in your retirement account.
That's awesome. Look, if you want to take more control over your personal investments, this could be a great option for you. If you guys have any questions pertaining to buying and transferring your retirement account over into a self-directed IRA, comment in the section below. And the process for this is very inexpensive, and it's way cheaper than most financial advisors that are currently handling your money. So go ahead, comment below, or reach out to us if you have any further questions. As always, if you got any good information from this, we appreciate you guys subscribing, like the video, and we appreciate your support. And thank you again very much for being here today and filling us in.
Thanks for having me, guys.